this is Gideon of Gideon Forex Academy. It has been long since I posted a video on here. Thank you very much for those who are watching my videos and also liking and subscribing to the channel and also sharing with like-minded traders. Today I'll be sharing a very profitable strategy of trading. I'm going to be showing you 4 ways you can actually use the moving average to profit in the market. Those are 4 strategies. So we are going to begin right now. And before we go on, if you are new here and you haven't subscribed to the channel, just do me a favor and hit the subscribe button, like the video, and watch it till the end for the full understanding of these 4 strategies. Let's go. As you can see, guys, this is a downtrend and we're using the 200 moving average to identify the trend of the market. In this case, it's a downtrend, and in a downtrend market we are looking for only selling opportunities. All right, so we are looking for selling opportunities below the 200 moving average. You can use any moving average, 20, 50, 100, whichever is convenient for you, but in this case we are using the example with the 200 moving average, and we're looking for selling opportunities below the 200 moving average. As you can see, you sell below the moving average. All those are illustrations. I'm just demonstrating to you how you could have actually sold below the moving average in this case. All right, so we are looking for selling opportunities in this case. All right, so in the bullish scenario, we would be looking for buying opportunities, and we can use still the 200 moving average, like in this case, to identify the trend. And a trend is clearly an uptrend because the price action, all the candles are above the 200 moving average. And in this case, we are looking for only buying opportunities as long as price action and all the candles are still above the 200 moving average. So we are looking for only buying opportunities. And guess what? The 200 moving average is the one which has shown us the direction of the market and is clearly an uptrend. This is one way you can use the moving average to identify the trend. All right, so that is one of the uses of the moving average, is to identify the trend. We have seen in the previous example a downtrend, and in this example it's an uptrend. So we are buying in this case. All right, in this case it's a sideways market. So in a sideways market, you can see that the price action is above and below the moving average. Okay, and the moving average is in the middle of the price action. In this case, you do nothing. Do not trade in this market. It's very dangerous to trade in this market. You avoid trading in this market. All right, move on. The second way we can use a moving average is to identify the trend change. As you can see, this is a previous downtrend, and now with our 200 moving average, we can see that the price action around this point here, there was a trend change that happened around the crossover, and now we can see an uptrend that began, all right, at the break here. So at this point, we are looking only for buying opportunities above the moving average over there. All right, because the price action is above the moving average, we can only expect buying above that moving average. But we identified the trend change here, right here, when the price broke above the moving average. All right, similarly, we can see that there was a previous uptrend here, but the price around this point broke below the 200 moving average. So there was a trend change from uptrend to downtrend, okay, that happened at the crossover there. So we are looking for sales in this new downtrend now. All right, so we'll be looking for selling opportunities, only selling opportunities, guys. All right, below the moving average right here, there has been a change of the trend. So you can use the 200 moving average or any moving average, okay, to determine the trend change as long as the price has broken below or above the 200 moving average or any moving average you see. So you can see the end of the uptrend and the beginning of the downtrend. So the third use of the moving average is crossovers. Okay, so we can combine 2 moving averages, the 200 moving average, and we can use the 20 moving average, like in this case, or the 50 moving average, okay, like in this case. And in a bullish market, let's say in a bullish market like in this case, the 20 or 50 moving average crosses above the 200 moving average, like in this case, there's a crossover, okay? And there's a previous resistance zone over there. You can combine for confluence so that you can be sure or confident with your trade, okay? There was a previous resistance zone there, and the price broke above that resistance area after the crossover, all right? So you can be looking for buying opportunities above that resistance, previous resistance stand support, and now we have a buying opportunity. As you can see, that would have been a really good buying opportunity after the crossover and also above the previous resistance which stand support. That's a pivot area for those who know. So we are only looking for buying opportunities above that MA. Buy until the next crossover, guys, okay? So in the bearish scenario, you can see there was a previous crossover there. The 20 moving average crossed below the 200 moving average, okay? So we are getting ready to sell, all right? Look for only selling opportunities after that crossover, all right? So the third way you can use the moving average to actually trade. So whenever you see a crossover of the 20 moving average that crosses below the 200 moving average, you are looking for selling opportunities below the moving the 200 moving average, okay? And you can combine that with support and resistance levels to increase the chances of winning, okay? That gives you more confidence, all right? So this is how you would use the crossover method with the combining 200 moving average with the 20 moving average, all right? So this is how you trade this method, all right? So moving on, actually the fourth way you can actually use the moving average is as resistance and support. You can use the moving average as your resistance and support, like in this case, all right? So we are looking for selling opportunities here using the 200 moving average. The yellow line you see there is the 200 moving average. So we are looking for selling opportunities at the bounce off at the 200 moving average, okay? As long as we stay below, the price action stays below the 200 moving average, we are going to be looking for sales, like in that case. And in this case also, we are going to sell. Remember to wait for confirmations at lower time frames for you to place those sales, okay? But use the 200 moving average, like in this case, as your resistance, okay? Right there, you can see I sold there and there, okay? Those were good selling opportunities using the MA as the resistance level, all right? It can really provide good opportunities to sell as a resistance level, okay? As you can see, even here, we could actually mark out this area as a previous resistance zone, all right? As you can see, this would have been a very good a confluence for a sell at this point, okay? This was a previous resistance zone, all right? And we would be looking for selling opportunities just below that moving average going downwards, all right? So let's move on to the next one. The moving average also can be used as a support, all right? So you can use the moving average, whichever moving average that you're using, depending on your trading style. So like in this case, you can see that there's a previous resistance which turned support. That's a pivot zone, and we are in an uptrend. So we are looking for only buying opportunities. So there was a break above the resistance there, and then we are looking at buying at this level, all right? And we're also buying right there, we are buying right there, we are buying right there, all right? The reason we are buying is because now we are using the moving average here. This is a 20 period moving average, all right? So we are using it as a support area, okay, to buy, okay? Always wait for confirmations in your lower time frames using candlestick patterns to buy to the upside, okay? So we buy there, okay, because we can see confluence with the previous resistance at pivot level, and we're also buying there at every bounce off of at the moving average. We use it as a support
to go up. Okay, we buy there and we buy there at every retracement. At every touch of the moving average, we use the moving average as our support to buy. All right, we buy there, we buy there, we buy there, right there. So we are using the moving average, as you can see, as our support level. All right, every time the price touches the moving average, we are looking for confluence or confirmation to buy and continue the trend to the upside. All right, always wait for that confirmation, guys. All right, so this is how you can use the moving average as support.